Hey, good morning, guys. What's happening? Yeah, I'm hoping we don't have another weird day like we had yesterday. That was a little bit crazy. But unfortunately, we really don't have a lot of earnings, stocks that are reporting earnings. And that's the number one catalyst for our opening range breakout trades, or breakout or breakdown, just the opening range trades in general. Those provide the strongest catalysts. Now the other catalysts, they're not as strong, and a lot of times they're flaky, and it's hard to really have confidence in what they're going to do once the market opens. A lot of times they don't really give you follow through. So it's like, I get asked a lot about the, what's the win ratio on, or win-loss ratio on opening range trades, the strategy. The reality is there's no way you can know, because it's going to be different for everybody. It really depends on who's trading it. Because if you're not, if you don't really have a lot of experience trading it, then your ratio is going to be low. And then it depends on the market. What market conditions we're in. The month between kind of when the previous quarter's earnings season ends and then the new one begins, that's going to be really slow. You're not going to have a lot of earnings plays. You're going to have stocks that are reporting earnings, but these are usually the really low performing stocks. You're going to get one or two thrown in there that are pretty decent, but they're going to be few and far between. And so we're not going to get the stocks, and therefore the strategy is going to be a little slow. And then it's going to pick up again once earnings season gets in full swing. So there's several different things you have to look at when you're trying to assess a strategy. It's all how successful it is for you is going to be based on how well you trade it, your discipline, your patience, how well you're able to, vet the stocks and build a legitimate trade plan for that strategy. I don't know, Michael, because we don't just trade earnings. We trade other catalysts. So, adding it on the scan wouldn't make much sense. Plus, we've got two earnings scans here. We've got the up with earnings today scan, and then we've got the down with earnings today scan. So we've got a separate scan for earning stocks. But this scan, the ORB pre-market scan, I only want stocks that are meeting, that's going to have that a dollar gap up or down. It has to have that dollar gap up or down, and it has to have that volume. At least 50,000 shares traded for it to hit this scan. So that's going to give me the best group of stocks that I can vet and go through and try to pick the ones that I feel are going to give me the best opportunity, for an opening range trade. But I'm also forward looking. I'm looking for not just the opening range trades, but the, continuation. Which ones look like they're going to trend all day? That's another big thing for me, because, my ideal day is getting in one stock and trading it all day. My biggest days are those days where we find one stock that we can trade all day. The days that I do okay on are days that I trade multiple stocks, because you're not really getting good follow through in any one. You're getting decent moves in 2 or 3 stocks. But the days that you can have one that move, that you get the opening range trade with some good follow through, you get the bounce and then trend continuation, or you get the pullback and trend continuation if you're long, those are the ones that I really look for. And those are the ones that you see, when earnings season is real hot and heavy. So again, this scan is looking for stocks that have gapped up $1. It's scanning those 7,000 stocks that we were talking about last week, and it's looking for stocks that have gapped up at least $1. That's what this is. This is telling you how much a stock has gapped up or down. If it's green, it's up. If it's orange or red, it's down. So all of these are gapping up. This is telling you the percent based on, what the dollar amount is relative to the price, of the stock. And then, I'm looking at float. I like stocks with between 50 million shares and 100 million share. 500 million share float. That's my sweet spot. Now, yeah, I'll trade outside of it, but I try to look for those stocks that's in my sweet spot first. Those are going to give me, that's where I'm going to put my focus. And then I'm looking for, as far as the ATR, I'm looking for stocks with the ATR over $1. Now, obviously, a stock like ALDX, if it gets the right catalyst, it's going to move. Like, its ATR is 66 cents, but it's already gapped up $4.41 this morning. It has a low float, which, will take me out of that game. But, a nice gap up so far. So just because it doesn't have $1 gap doesn't mean it can't do it. Like BBBY up $3.19. It only has a 46-cent ATR. But what I do is I use that to help me plan my trade once the market opens. Because it's, doesn't matter what the gap that it made, it usually does that pre-market. And once the market opens, this is a different ball game. So not a whole lot to look at this morning. So we'll take a look at SQ. Now, how I vet these? I use FinViz. And let me bring this up. And what FinViz does is it gives me pretty much all the information I need to make an informed decision about the stock. So the first one is SQ. The first thing I'm going to do is look at what's the news on it? What's causing it to gap up or down? And so here, starting this morning, usually I can look the day before. And we just look at the news. What's being reported? Is there anything, here's an analyst that says it has 20% upside potential. So you got one analyst pumping it. Then Zacks has a story on it. Forget Apple's credit card, buy FinTech Power Square stock on the dip. So SQ is being pumped this morning by several people. And then over here, this is just crowdsourcing. When I talk about me crowdsourcing, that's what I'm talking about. I'm looking at, I think they pull this from StockTwits. I don't actively watch Twitter anymore. I think I showed you guys last week the spread I had, the tweet deck where I was monitoring all of that. All of that's just noise that I had to filter out early on. So I'll look at this, and sometimes I get some good information here. There may be an article that's not listed here yet that somebody posts, and I'm able to read it. Now, I don't care what other people's opinions are if it's not really supported by anything. So I'll just kind of buzz that and see if there are any links to the a news story, anything like that. I'll go that route. So I know it's being pumped this morning. And then what I'll do is I will bring up my daily chart and a 5-minute chart. So let's go. We're just looking at SQ right now. We'll go back to Roku. Roku is going on and on. Both of these are like right on the edge of falling off. Any slight pullback, Roku's going to disappear because it's right on that dollar window. And then this 115 on SQ, it's kind of right on that dollar window. So what I'm doing is I'm looking at what the price action was this morning, looking at the volume, and it's very choppy. It's not a deal breaker. It is definitely something I would watch. I would put it on watch because we do have the gap. The catalyst really isn't that strong, so I wouldn't expect a really huge follow through. So league coming into the open, as you'll see as we get closer to the open, you'll hear me talk about what I'm looking for to if it's going to stay on my watch list or is it going to drop. So so we're going to be watching SQ. Let's go back to Roku. And we know what was up with it yesterday. This may be some continuation from yesterday. Let's take a look here. Yeah, it's still on the Apple bump. I don't see anything new other than that. So the Apple deal was positive for it, and this stock ran up all day. This was if you latched onto this after the pullback yesterday, you had a really nice run up. And this is the stock. This is what I'm talking about. These stocks that will make that run and work pretty much all day. So there's really no trade event in through here. But once we got over this level, we pulled back to this. This was a solid trade up to this 68.40 level. Really, really solid. Yeah, I wouldn't trade it through here because I wouldn't buy into all of this resistance. I know to me it's more of a risk to buy into this resistance because you don't know at what level this is going to come back. So for me, this would have been the ideal and just trade it pretty much most of the day. So that would have been really solid. But we'll keep this on watch. The levels are already drawn on this. At this point, I'm usually looking at the daily chart, finding the pivots on the daily chart. That's what these dashed green lines are. These are the pivots from the daily chart. And if there's let's say a daily moving average in the fold, I'll mark it. So, I doubt if this is going to be in play today. So I won't worry about marking it on the chart. But this 64.17 level. So I'm looking at all of that. And that's how I'm going to determine, do I have, a good profit window here? Obviously, we've got all of these levels below. So the move I would want to see is to the long side. Now, that's what I would want to see. But there's no guarantee that it's going to set up like that. So I'm going to have a plan both ways. If there's no plan for a short, like here, no way I would even look to short this. So there's no short plan. If it sets up to the short side, then I wouldn't trade it. Because for me, this is too much, traffic. And I'd be shorting into all of the support, and there's no way I want to get into doing that. So I'll have, short side, no plan or no go, and we'll have a plan to the long side. So obviously, over this level, 68.40, right here, the next level we get to is going to be up here around in the 72s. Almost 73. But looking at this could be a little bump in the road here that we could run into. So I'll mark it. This is kind of a small pivot here where it ran into this level and then it pulled back some. But still good windows. So we're in good shape there. So I will put this on my watch list too. Now Roku has been a really challenging trader. It can get into some swings here. So you really have to be patient and give it some room. The ATR on this is $4, or just under $4. So you have got to give this thing some room. And so sizing up on this, and this is where I've made my mistake in the past, is sizing up on it and not being able to give it the room it needs and getting stopped out. So we're gonna keep Roku on there. Let me see what's up with BBBY. I'll just type this in right now. All right. So BBBY. I can't say what I was gonna say. Bed Bath and Beyond. See what's up with the source. As report says, activist targeting is bored. Bed Bath and Beyond stocks rocket after Wall Street Journal report that activist investors look to replace the entire board. I don't know why it's going up. I guess they see that as a positive. I kind of don't. But I guess they do. But right now it's trading in this gap. So let me mark the bottom of this. Okay, up to 1875. So it's kind of trading in this gap right now. Now, what a lot of people, here's a theory that a lot of people have in terms of a gap. Normally they say when a stock gaps, it negates all of the price action, prior to the gap. I don't believe that. Just because it took out all of these levels doesn't mean, I still think they're just as relevant. And you got to respect them. So what you see on BBBY is really tight. You got these levels with they're less than 50 cents apart. And there's no room for this stock to move. There's no room for it to breathe. So for me, going long is a no-go. So let's look at, and I typically don't trade this stock because it rarely gives, any really good move potential. But what I like about it to the short side is that there's nice windows of opportunity. The only problem is we've got moving averages stuck between each level. So to me, this will be not crowded in terms of people trading it, but crowded in terms of, traffic. So this would not be one I would put on my watch list. And this is a good reason why I don't trade lower price stocks, because they don't have the move potential that I like. And I don't like sizing up in this account. And really, I don't size up in my main account relative to my account size. So for me, I don't like sizing up. That's why I don't trade cheap stocks that you got to take 5 or 10,000 shares on to make any money. For me, that's just too much exposure. So I kind of stay away from there. So BBBY is not going to cut it. Not going to cut it. Okay, CCL. Yeah, that's that cruise line. Let's see what's up with them. I don't see anything on there. Oh, earnings. I completely. Now it's gone already. See, here it is. It just picked up some volume. It hasn't even got the dollar yet. So it peaked on there for a minute. Now it's off. You know, here all of these are just too cheap. You know, this hasn't even got the dollar yet. So none of these are in play. And none of these have any gap. I mean, have any volume at all. You know, LIFE, RHT, they reported yesterday. Remember, we were looking at RHT for a potential earnings trade, but the price action going into the close didn't look right. And it translated to how it traded once it reported. And that's why we stayed out of it. So that was a good lesson yesterday. So not a strong watch list at all. So let's take a look at Apple. Apple obviously is going to be in play. It's not going to hit my scan because of the price. But I didn't like the way it traded yesterday. It made absolutely no sense to me, which it doesn't have to make sense to me at all. But that was kind of my decision to not trade it. You could see, even though it chopped this way down and it chopped this way up, it just wasn't clean. It didn't really feel clean to me. Now, this was a solid opening range breakdown. Solid opening range breakdown on this. But after this move, you had some choppiness, back and forth. And it was hard to kind of gauge this or read it for any sustained moves. Now, some people don't mind trading this action. For me, you have to find your comfort zone and work in it and maximize the potential in your comfort zone. That's how you make it. Now, as you grow, you can slowly test outside your comfort zone. That's how you find growth in this. You know, everything you do in this market is practically scalable. You know, the amount of money you can make is limitless. So it's just a matter of finding your sweet spot, finding, you know, your place in this market, establishing yourself, and then slowly test your boundaries. You don't want to just go outside of it full tilt because you probably, you know, lose more than you want to. So you just want to gradually test your boundaries as you grow. You know, before you know it, you know, you'll be surprising yourself. But the problem with everybody is taking that time, is being patient enough to allow this to happen. You know, that's what kills everybody, is being patient. Because we live in an instant world and we want things now. We want things yesterday. All right, so we like Apple. We're in a huge window here. Let's see where we're at. I know on the daily chart, it just looks like a mess. See, we've got the 200 here. $100, no, 190.62. That's close. 190.65 is close. So that's in the right place. So let me go back and see if there's any. So that kind of lines up with this resistance here. So I don't need to draw another line there, because that all pretty much lines up. All right, so it looks really crowded on the daily chart. I know the lines look a little crowded on the daily chart, but when you spread it out and you're looking at it on the 5-minute chart, the intraday chart, which we're trading, it looks pretty good. You've got really nice windows of opportunity here. And the moving averages, I love it when the moving averages are tight together, because it's a smaller range that this thing has to trade out of in order to get in, free and clear area on the chart. So Apple is a little outside of the price range that I like to trade stocks in. However, it does give us good opportunities. So we'll put Apple on our watch. And then, at 9 o'clock, I want to have my watch list done by 9 o'clock. So we don't have anything on earnings. So we don't have any stocks that have the strongest catalyst for opening range trades. No, we just don't have it today. Let's see. All right, so yeah, we got another slow morning. Not a whole lot. So I'm just watching SQ, Roku, and Apple right now. That's it. And what I typically, and what I do sometimes, when we really slow and we don't have much, I'm gonna look on the main gapper scan, which is this one right here. This is the main gapper scan. This is, so what I do is I just look down at the volume. If the volume is over 50 grand, I look to the left, and quickly, if the price is not right, I just keep moving on. So that's all I do on this, just to see if I missed anything. And nope, didn't miss anything. So once my watch list is set, I finalize it and I don't chase any stocks. Doesn't matter if it hits afterwards. You know, I'm not going to chase it for any opening range moves. The only stocks I'm looking for at the open are the ones that I have on my watch list. Now, other ones that may pop up later on my scanner, I'll look at them for secondary moves. The thing is, I want to keep my focus on what I have. And what happens to us sometimes is we get spread out because we're worried that the stocks we have don't move, or if they don't look like what we want them to look like at the open, then we start chasing other things that other people are watching. And obviously, if it didn't hit our scan and it didn't meet my criteria, it's probably not going to fit my strategy anyway. So I shouldn't, I'm not going to chase after anything. So that's what we have to do. We've got to keep that mindset going forward. So let me share. I'll type this in over here. And I want to welcome the guys that are joining us on YouTube. Now, I haven't done a live stream in a long time. So good morning to y'all and welcome. Got a short watch list this morning. SQ, Roku. So, not like I said, the number one catalyst for the opening range trades, the opening range strategy is gonna be earnings. We don't have any on earnings this morning. So we have to work the ones we have and keep that in mind, and we'll focus, we'll make sure we keep that in mind when we're executing our trade plans, building our trade plans, and executing them. So my first and the number one rule that I have, the number one rule is managing your risk. Managing my risk. That's my number one rule. Because that's what allows me to, when I have bad weeks or have bad months, or when the market is really slow like this, that means I have to really be aware and really focus on managing my risk, not letting things run and get out of hand, and sticking to my max loss rules. No, they are still considered for opening range breakouts. It's just that you have to keep in mind that they're not under the ideal catalyst. So when you make trade plans, you may have to, instead of taking half off on the first stop, you may have to take 2/3 off, or you may just take it all off, depending on what your account size is. It's just that you have to make sure that you adjust for that you're not trading an ideal catalyst, and you want to continue. You don't want to trade outside of the box on these. What's the saying that I have? Prepare, don't predict. So this is really a case where you need to prepare for what stock you're trading, for the market conditions, but don't predict. Because if you start predicting, it's going to cause you not to execute your trade plan the way you're supposed to. And when that happens, things get out of hand. So just to kind of give you a visual, let me bring this over. All right, so you look at my March. Look at the March calendar. And these are all every trade that I took here in chat. This is the way it adds up. And you can see we had a really, really slow week, but look at the red days. My max loss per day is $300. And I'm staying around that. I'm staying within that. As long as I stay within that, I know I'm going to have good days here and there. I've only had a couple of really good days. The Thursday the 7th, and then last Monday. And last week was okay these days. This day should have been a lot bigger than it was. I didn't trade very well that day. But, last week was a good week. I could have destroyed this week. Friday, had I not managed my risk, it'd have been done. I wouldn't be in a position to make a decent profit out of this account. And my main goal for this, when I started back at $1,500 and $1,000, all those times, in the last 2 years, it was to show you that it's possible. And you don't need to chase these low dollar, low float running stocks that if you do, you probably aren't going to end up with much anyway. You'll have a big trade, but then you'll lose it all. And then some. You may have a big trade, then you lose it all, and then some. It's really hard to manage your risk, chasing these low dollar, low float runners. So having, trading stocks in a nice little sweet spot that are not really volatile but can give you huge moves at any time. But you typically won't get stopped out if you're, setting the right position size. You're looking at how much room you have to give the stock. All of these things, when you put it all together, you manage your risk. You're gonna do well. And that's what this is all about, managing your risk. And so we went through the 1500. I showed you how, demonstrate you can do it. And you can do it in a broker like SureTrader or CME Group, or, I don't know about a prop firm. I don't like the way they're set up, but I'm sure you could do the same thing in there. But it's possible. And so beginning of this year, we started with $5,000, and that's what I'm trading with. And you see January. Let's look at January. This is when I still was working 2 accounts. And I decided at the end of January, or toward the end of January, I'm not going to try to do both accounts. What I do in that other account, that's what I do. But trying to share both, and I'm not trading the same strategies all the time, or my risk tolerance is a lot greater. I'm not going to share it. I was showing it because I wanted you to see what you could do, where you could be, based on, where you could grow to. This is where I started, and this is what you could get to. But it was getting a little confusing, and I know human nature, naturally you're going to gravitate to where you see most money, and a lot of times that doesn't work out well. Because if you don't know how to trade and make $50 or $100 a day, there's no way you're going to be able to make $1,000 a day or whatever. It gets to be very difficult. So now we're only focusing on the small account. In my large account, I got about $140,000 to $150,000 in there that I can trade with. So, like I said, you wouldn't even be able to connect with what's going on. So here is February. This was the best week of the month. Best month of the first quarter. I actually had to wire out in February, keep my account under $10,000. And you can see I had this one huge loss, and this was a earnings play. Now the earnings strategy is very difficult to manage your risk on, and that's why I don't recommend it for traders who really haven't been able to be successful any other way. This takes a lot of discipline to keep yourself out of it. This one, this was the first one in 4 or 5 months that went against me. And it went against me hard. So, you're going to see that. But that's the only one. And I'm very meticulous about my earnings trades. And you can see the next day we made over $3,000. And that was basically on another earnings play. So if you see that every now and then, that's what this is. It's not that I'm not managing my risk. That's just from an earnings play. Chicago Reality. Now, you can find the same stocks, the opening range stocks on Thinkorswim. I'm trying to remember if I thought I had a video out there here on YouTube that talks about how to scan pre-market using Thinkorswim. There is a scan that one of the members here in the community shares with other members that focuses on stocks like my opening range. But Thinkorswim does have a pre-market, scanner. You just have to know how to set it up right. And yet, you're right. Everybody, you have to find the person that teaches the style that you like. Or some people like that fast-paced adrenaline, high adrenaline thing. That's what they like. And that's what they're comfortable with. And some people aren't. So yeah, you've got to find where you fit in and learn what you can, but eventually you're going to develop into your own trader, and you're going to want to do, you're going to want to do what feels right for you. You're going to change some things around. You're going to, add this moving average and take this moving average away because you see things better. All of that is part of what is part of trading. God dog it. Which one did I lose? Parabolic movers, high day. Was it surging up? Yeah. That was surging up. Alright, so let's see if we can get ready. I talked a little bit too long today. Okay. Let's see if we can get logged in here. We did an update. I had an update go through last night, so hopefully this doesn't mess up my desktop here. So the big thing is just being patient at the open and letting things settle in. Let's see, open desktop documents. Cross my fingers that nothing changed. Yeah, some stuff changed. Every time I updated, things changed. Symbol, shares, average cost. Oh well, we'll deal with that. when the time comes. I can work on that later on today. That profit calendar is for the small account. That's the only thing I'm sharing right now. Adrian, I just have the basic trade idea service. I mean, I don't even use all of what the regular account. I use maybe 10% of what the standard trade ideas account is. You know, I'm just a simple guy, and I like to keep things simple. It's easier to maintain that way. Okay. Now, SQ is one of those that really needs to settle before you get in it. So that one can really go crazy. This thing changed a lot. I need to go back and make this. Gotta work on this evening to get this back to where it needs to be. Let's see. Roku is on that pullback. Roku 68.40. So the hardest part is sitting back watching these stocks take off at the open and make these huge moves, and you're like, man, if I had just guessed this or guessed that, I'd be in good shape. Let's see. 194. I can't put any of those levels on there, so we're just kind of stuck. Let me mark the pre-market high here. That may be significant. Hey, that's not bad. I do the 5-minute opening range. I look for the 5-minute opening range first. But there's nothing wrong with nothing wrong with waiting. I know a lot of people wait for the first hour. They wait the first 60 minutes and then they engage.
ALDX. ALDX.
Wow, look at Apple go.
ALDX. 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 ALDX.
All right, we get the picture. ALDX is kicking. CCL kind of put itself in the picture. It's on earnings. That's the only one on earnings. That's the catalyst, but it didn't look good to start with. See how we had this huge sell-off pre-market? It just didn't look good when I first started looking at it. But going into the open, you had this huge sell-off. And that's the pre-market low there.
BBBY.
I don't have shares of Roku to short, so
ALDX.
Alright, so SQ and Apple's the only one that's really made some type of significant move here. But you don't want to chase it the first 5 minutes because it can eat you alive. Supposed to be green, dummy. This used to be the hardest period of time in the market for me. Is at the open, watching stocks make these huge moves and then not being able to, not trading it, just sitting on my hands. And then the minute I started trying to take these trades and guessing, you know, because what you're doing is you're predicting that the stock's going to continue to do it. And I started predicting more than I prepared, and it caused me to, you know, lose some of my account. So let's see. Okay, Apple, I don't know what the hell that's doing. Let's buzz through this. SQ, huge candle, huge sell-off candle. We're running right into the opening range. What I'm concerned about on SQ is this right here. This red to green. That's what I'm concerned with on SQ. The market is running up strong. So you're going to have to, you got to be smart. Alright, so I'm going to see if we... I don't want to short into this red to green line because you see how much support and everything that had. that's kind of what's got me on pause here. So Apple's kind of the only one but for me, I'm not sold on it. I don't want to trade Apple opposite the market. You know, that's the thing with Apple. You know, I don't want to trade it opposite the market. You know, the SPY is running up, Apple's going down. I don't like trading it against the market. And this is the hardest thing to do. But I don't want to establish that habit. Yeah, most of the time you see it trade with the SPY. So that's why I'm not biting on this.
ABC.
No way I'm a bite on this. So everything on our watch list has pretty much not done anything. You know, CCL, you got to be careful with it. Now, getting closer to getting closer to 10 o'clock when they had their conference call. Yeah, so this one, you know, and this one may give us a delayed move. Just may give us a delayed move. So we're waiting to see what this is going to do. No, Matt, that's what I was talking about before. I would never go long into all those moving averages. You know, even though the market is pushing up, you know, this is showing a lot of strength. I would never go long into those moving averages. Oh, there we go. This is what we were waiting on. So I want to see it give me a 2-minute candle to close below this red to green. And we may be in business.
AACC BBBY.
So gotta see it take out red to green here. Gotta take out red to green here. And it's having some trouble. It did not close. This 2-minute candle did not close below it.
APC.
All right, so let's see what this candle does. All right, gonna go for it. We'll see. You know, I went in with only 200 shares because I wanted to be able to give it enough room to make a move here. Now my stop, you know, max loss stop is $150.
APC.
So typically that's a 75-cent stop. So really 75 is going to be my stop on this. Or, I mean, my max loss stop. Now, if we close back above this, and we take out the 200, I mean, see, this is the crazy price action that you see on SQ. So I got to put it in just in case it blows up against me. This is the crazy action that we see on SQ, which is why I only went in with a smaller size. I could have gone in with 100 shares to test the water. A lot of traders do that. You know, they'll go in with 100 shares, and like if it closed below this, then they could go in with, then they can add to their position. You know, a lot of traders do that. And I do have room to add also. I can actually add another 100 shares if I wanted to. But SQ is not the stock to do that on. Not for me. Not for me. Alright, so for my first target, what I'm looking for is it to potentially get down here. This was yesterday's low, out, right at the close. So I'll potentially be looking for it to get there. But it's got to get through this red to green. That's what it's got to chew through first. It's got to chew through this. And big money is not letting this thing close below red. It's not letting it close red. And that's not a good sign. It's not a good sign at all. It's not letting this 5-minute candle close red. My chat with I don't know, I guess, I don't know. Don't really know. As I'm not on his radar. I'm not big enough. I'm just an average everyday guy trying to fight these big money guys, getting my little piece of the pie every day. Yeah, he's grounded until spring break, where I can keep an eye on him. I gotta be able to keep my eye on him. Yeah, Mitch, I'm referring to yesterday's close. See, they're not allowing it to close. They're not allowing it to close. It keeps getting bought up, and they're not letting it close red. So that's a bad sign. That's just a bad sign. But we got to give it, we got to give it a chance. Got to give it a chance. This is when you see, big guys, anytime you see stuff like this, where they're not allowing it to close below, they're really not allowing it to close below the 20 good, the 200 good. much less close red on the day. So I'm just going to wait. I'm going to sit back and wait on CCL and see if it's going to give us a chance. Once the conference call kicks in, I'm going to be looking at it. We'll see if we can give it a chance. But this is the risk that we take with SQ. I told you pre-market, SQ trades really crazy and really funny. Normally you wait the first 5 minutes, let it work itself out. After 15 minutes, you would think it's got an identity, but it doesn't. So we'll sit back and wait for CCL and see what it can bring us. So if you guys got any questions, you can shoot them. There's going to be some dead time here while we wait for CCL to see if it's going to do anything. Right now, it doesn't look good for CCL. It doesn't. The volatility is just not there. But it could be that everybody's waiting for the conference call. So, we'll see. And so there, we're stopped out of SQ. But we managed our risk. We're not sitting here holding it, hoping that it's going to come back down. We take our hit. The morning is still young. And I haven't reached my max loss yet. So I'm still in the game. Yeah, Ben, that's the exercise. When you're just learning and you're trying to when you're just learning and you're trying to develop your skill set to where you can be patient and allow yourself to where you can be patient and allow yourself to follow a trade plan. A simple trade plan. If you can follow it day in and day out, then without question, then you can start adding elements to it. So we're gonna keep our eye on CCL as it goes into the conference call. I'm not going to jump in it right now. I'm going to wait. Going to wait and let this do its thing. So let's go back to SQ real quick. Now, I could have traded this a lot more conservatively. And what I mean by this, we never really got a close below the 200 other than this candle here. Never really got a close below the 200. The other thing on the 2 minute, what I was looking for on the 2 minute was a 2-minute candle to close below, what I probably should have waited for was this candle to make a new low relative to that candle. And that would have triggered an entry. But here, I was being a little bit more aggressive on this because of how SQ trades, and I know, what kind of moves it can put in. I was being a little bit more aggressive, and, it just didn't work out. And as long as we were below the VWAP here, I was going to give it a chance. But now we're gonna go back to CCL and just keep an eye on it. Bum, 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 bum. All right, so CCL, I'd have to wait until the conference call started and then kind of take it from there. Because on Friday, I traded my way. By 10 o'clock, I was done for the day. I traded myself completely out. Yeah, you can make a living swing trading, yeah. I mean, it'll take you a minute, to build up the account to where you're actually, pulling in the money that you need, to support like your lifestyle and your bills and all that stuff. But yeah, you can definitely do it. It's just like with day trading. You just have to build up your nest egg here. Man, look at ALDX made a really good move. It's out of my price range, but It would have paid nicely for sure. Once it broke that opening range low, there was no looking back. So I made a really nice move. Um, 6 to 8 months. I think you need to keep 6 to 8 months. Because you're gonna, as a trader, you're gonna go through slow months. There's no way to avoid that. You're gonna go through these slow times. And you got to be prepared for it. And if you're stressed out, you're going to force trades. You're going to force yourself into trades that you just don't, that you shouldn't take.
STNE.
And so I know in starting out your first trade, you know, with the loss, that can cause you some stress. And, you know, makes you want to trade so that you can make it back up quickly. You start looking around and then you start seeing things that just aren't there. And it causes you to, you know, make some bad decisions. It's kind of the same principle. When you don't have enough money saved up, you know, and the mortgage is due, and you like, man, I got to make my mortgage. Or I got to make my car payment. I got to, you know, it puts that undue stress on you. But we learn our best lessons from losses. We learn our best lessons from losses. All right. It's almost game time. And I would use the same plan on this. See where it looks like we're trying to bounce off of the pre-market low. And honestly, I would love to see a bounce here so that I could get in. So we're sniping this CCL now. We're sniping this CCL. I don't have a stop loss area yet. I won't have one until I get in the trade. But once I get in the trade, this is going to be the level I'm basing my trade off of. But I want to see a pullback right now. We get a good bounce off of this and a rejection on a higher low. A lower high. Let's say we pull back up to the 20, the 9 and the VWAP here, and we get a rejection. Bam. That'll be perfect. That'll give me enough room to try and make some profit here. No, not scalping it. I don't look for scalps. I scale out, but I'm not scalping. Yeah, it feels weak, but this level is getting bought off of this level. So I gotta respect it. Gotta respect it. Yep, so I'm hoping sniping is, just waiting for the perfect entry, waiting for the perfect shot to get in the trade. Too much traffic. I didn't like BBBY because it was just too much traffic. And you can see it didn't really move worth 2 cents. It just kind of crapped around. Here's the opening range. This is the opening range. Come on, damn it. Okay, that's the opening range high. That's the opening range low. It hasn't broken either way. Now here, it may be trying to break, here going to the upside, but it's not a whole lot of room. And this Thinkorswim is just too slow today. So we had, let's see, a daily level here. See what, 1786. Yeah, we have one right there at 1786, another one at 1757. You know, there was just so many levels sitting around here. 1716. So that's what I mean by too much traffic. It was just so much right there. And then you got 1786 is the next one.
CS.
Oh no, I did that one. And the next one is up here around 1834, but you can't put that on there. It was just too much in the way. So that's why I kind of stay away from it. Yeah, this is DOS. This is this DOS from SureTrader, the SureTrader Pro platform. But I use Thinkorswim for my charting. I vet all of my stocks and all of my let me show you. I'll bring one up here real quick. I've got 4 screens. You know, just like this. Like we got CCL that we're watching, SQ that we're watching. So this is what I use to watch my stocks with. Is this Thinkorswim. This is the charting that I used from the very beginning. So I've got nothing but experience with it. Alright, so we're looking at CCL. This is... I'm still trying to get this figured out here. Still waiting on the perfect opportunity to get in. Still waiting on that perfect opportunity. Yeah, I pay to use DOS with IB. And then it's free with... I trade enough with Speed Trader where I don't have to pay for it. Well, with IB, I'm just swing trading. I'm not day trading with IB. No, I don't have an affiliation with any broker. All brokers operate with some degree of within some degree of conflict of interest. So I don't affiliate with anybody dealing in this industry. Not even Trade Ideas. You know, anybody that sells their software and then they end up trading, it's a conflict of interest. Not saying that they're bad or they're doing it on purpose. It's just a conflict of interest. I mean, just like SureTrader. They have this chat room. Of course, they're going to pump the stocks that, that's going to benefit them. No, I get my platform for free. Because if you trade enough, if you do enough trades, you don't pay platform fees. I still have to, I still have commissions, which are really cheap. No, I don't try to do that. I trade. Sitting here trying to get rebate orders and focusing on that, that doesn't make sense to me. Yeah, 0.0044. I think that's what it is. I haven't really looked lately, but I believe that's what it was. 0.0044 per share. Because honestly, I could care less about commissions. If you make money on your trade, commissions aren't even a factor. It's a moot point. The only time you worry about commissions is if you're not trading worth a damn and you're only taking $30, $40 moves. Then commissions are going to eat you alive. But if you're trading right, it's not going to hurt you. Doesn't look like CCL is going to reject here. I don't see any volatility anywhere right now. Nowhere. No volatility anywhere, man. But let's see what CCL is going to do. And my buddy SQ. I ain't fooling with it no more. After it took me out to the woodshed, I'm not messing with it. Yep, I don't believe there's a short opportunity in here anymore. It's going to be a no-go. Gonna be a no-go. See this. That would be the next level. Now, when we were coming through here, this didn't mean nothing to me. Now, this is, this is going to be an issue. Not really a clean anything. But I want to see it. I would like to see it come back down through here. Yeah, today is a good scalping day. That's there's no doubt about that. And I just don't have enough, to scalp this. I need to go in with like 500 shares. And I am not going to do that. It is not worth it to me. But this is the move that I was looking for earlier. It to close below this and then continue on going. Yeah, Roku makes me sick every day. Because I, don't have any shares of it to short. And I definitely would have been shorting this today. Well, then it's too late for ORB. After 10 o'clock, there's no opening range trades for me. Unless you're using the 60-minute. Or maybe a 30-minute. ORB. No, I'm not short CCL. You can see right here, you can see what my orders are, the executions and all of that. If I was in a trade, you would see it. WWE. Let's look at this. What is he asking? Yeah, what was the news on it today? Was it a analyst upgrade or something? It just doesn't have enough volume to trade right now. Yeah, I got Roku and Speed Trader. I can get shares. But Sure Trader does not have any. Or you can pay to locate them, but I'm not paying them a damn penny. Because that's not a hard to borrow stock. I could see paying them for hard to borrow stocks, but damn if I'm going to pay them, for something that's readily available everywhere else. With them or with any broker, you got to be smart, because and some are worse than others, but they'll rape you if you let them. Yeah, it's on the. Yeah, but you need volume to trade this, or you're just rolling the dice on it. I mean, this looks really weak, and it looks like it probably will sell all the way back off. But with no volume trading it, all it takes is one person with average means. They could eat up the bid on this. They can bid this right on back up and keep and take it. And you'll have people looking to buy over this break. You know, these guys know exactly how to push our buttons. They know how to push our buttons. And we got to figure out what they're doing and then turn around and beat them at their own game. Well, not necessarily beat them, but be on the same side as them. And when they start feeling all that weight on their back because everybody's figured out what they're doing, then they're going to switch it up. All right, what we got on CCL here? What do we have here? All right, so this doesn't really come into play anymore. No, it's not taking it off. Shit. I'm not worried. That I'm not worried about. So let's see if we can get an entry on this. All right, so we're gonna take this here. This I can't delete it for some reason, but right now this doesn't matter to me. I can't delete it. I don't know why. So ignore that. I'm looking for the move to get through, to break through the pre-market lows. That's what I'm looking for. Now, if we can't get through here and we bounce back above the 9 and the VWAP, then so be it. But I like the setup here. This feels pretty weak. It has that weak feeling. I like the price action. So we want to give this thing an opportunity. So 52.20 would be my first target if we can get there. We got to work our way there. And this would be the last trade I would take this morning, regardless of what it does. After 10:30, the volatility is just not there. So I would not risk continuing to trade and then not be able to have anything for the afternoon. You know, a lot of times when the morning doesn't work out well, the afternoon tends to come around and give us what we're looking for. So we'll see what we got. I don't know why it's not allowing me. There we go. So I'm looking at this level here as this is the level I'm looking for it to break through. But I don't like the fact that it got bought up off this 52.50 like this. It didn't come into play neither time we sold off down here. Why the hell it started now, I have no idea. But why somebody came in and started building themselves in at 52.50. And it's probably why we'll never know. Man, this feels like summertime. This type of trading feels like summertime. Yep, the average cost is the entry price. Yeah, it sucks right now. But we'll things are gonna get better. The market always comes around when earnings starts to kick in. So, I'll be looking forward to that. This is the time, like I say, you just gotta manage your risk. Don't let if things aren't working out well for you, then if you manage your risk, you'll be in the game. So when that next big day comes, all of these losses aren't going to mean a thing. But we are not. Somehow the weakness that was there got bought up. Whoever's fighting this has got some clout behind them. Too much clout. Um, what I'm streaming is my SureTrader platform, which is DOS. But the charting that I use to make trading decisions on and all of that is gonna be Thinkorswim. Some a-hole is buying this up. I wish I could reach out and just slap the hell out of this guy and say, hey, let it go. He's just setting a line in the sand and then like daring people to come down. Well, now this, all of a sudden, this one's not looking good. I use DOS because it's connected to the broker that I use. And since I started with SureTrader and DOS, I just kind of kept it, kept hooked up with it. I don't like changing things. Once I get comfortable with something, I'm going to stick with it. Now I do have an account, and I'm taking, lower price swing trades on Thinkorswim. So I do trade out of it. I just swing trade out of it. I don't day trade. Thinkorswim is not really set up for day trading. Let's see if we can get down to 52.20 this trip. How in the world can I cancel this? I'm about to choke somebody here. I'm about to choke somebody here right now. Now I don't use hotkeys unless it's pre-market, unless I'm trying to get in a stock on SSR or aftermarket or pre-market, aftermarket. You got to kind of use hotkeys. But intraday, I'm using market orders. Come on, you little tick turd. Get out of the way and let us little guys eat today. What do you mean the highest probability setup? You mean this? You talking about strategy? Oh no, there's so many different things that factor in to the strategies. It number one, it depends on who's trading them. How experienced they are, how disciplined they are in terms of following the parameters of that strategy. And then it depends on the market. So I feel any strategy that you trade, they're all going to equal out. At the end of the year, they'll all equal out because you've got different market conditions, and certain strategies will do better in certain conditions, and when the conditions flip-flop, then the strategies and how well they work will flip-flop. So there's no strategy that's going to give you 100%. There's just no way, because of the way the market works, the way the environment in the market, what makes stocks move. It's just, too many variables for anything to be 100%. But any strategy can work. It just depends on the person trading it. And this one isn't going to work. Damn. I'm 0 for 2 this morning. The ABCD pattern is pretty much obsolete now. Remember how I told you these big money traders, they figure out what we're doing? So that's pretty much obsolete. Now, it worked great back in 2015. Worked really good, but hasn't worked since. At least not, after I quit messing with it. Yeah, well, I'm going to stop paying attention to this. I'm just going to put the stop in. I mean, the longer it sits around here, the less probability of this trade working. But I am a trader, so I have to allow it to work. So, my stop's going to be 53, which is right around where the VWAP is. But unfortunately, the opening range low is still working here. And I figured they would have broken that spirit a long time ago, but it's just not working. Yeah, it actually formed a triple bottom. Which is why I said the trade is dead. Because you got 1, 2, 3. It's forming a triple bottom. It's like, shit. But I'll be going to lunch on time today for real. But I'm making sure this stop doesn't take me out to where, I'll be out of trading for the day. I think the afternoon we should be able to find something Should be able to find something pretty good. You know, we may have a couple of good earnings opportunities as well. We'll see. Now, I'm eating leftovers, 2-day leftovers. I cooked out Sunday, and I cooked out a bunch of food so that I'd have something for the rest of, at least until Wednesday. So they ate the last of the steaks yesterday, so I got hamburgers and hot dogs left. So I'll probably be having that for lunch the next couple of days. You know, we can't predict what this guy's going to do or, you know, who's keeping it from getting bid lower. We can't really predict it, but we got a plan for it. So we're not going to predict. We're going to prepare for whatever happens. So if it runs away, I got my stop in place. It's going to minimize any loss I take. And if it breaks through, you know, I know where my first target is. So I'm prepared either way. So, you know, right now I don't think it's going to work. You know, based on the price action I'm seeing, I just don't think it's going to go. But we are still below the 9, so I got to give it a chance. I can't just cut and run and it's still in place. So it's just a matter. That's kind of the discipline that I gotta have. Sometimes it costs you a couple bucks, and sometimes it'll make you a ton of money. But you gotta trust it. I used to watch the markets. I used to I got a laptop that I would take with me that I can, you know, I'm in my car with it. So at lunch, I decided to quit doing that. So I haven't done that for a couple months now. When I go to lunch, I disconnect from the market. I think you have to disconnect and clear your mind, especially on mornings like today, where our trades, where our trades just didn't work out. The market was just not there for our trades. You know, SQ, I know SQ. I know that I had fully expected it to have the, you know, the potential to turn around on me. I mean, that's just the nature of that stock, which is why, you know, if I have any other stocks with better opportunities, I typically trade those. A lot of times, I won't even put it on my watch list because I've got a lot of other stocks, you know, that's better. But we didn't have anything, so this time, you know, I'm going to throw it on there. Yeah, I think leaving or disconnecting yourself, you know, for me, I leave at 11, around 11, sometimes a little bit later, but I don't come back until like 12:30. the 1245 because I want to watch the stocks that I was looking at. I want to watch them coming out of lunch. You know, for me, that's important, is to watch these stocks coming out of lunch. So if there's one setting up, I'll be ready to pounce on it. You know what I'm saying? So it came down there and touched it again. We needed to get through that. So I'm looking for 52.20. Hell, if it gets close, the way this thing is trading, I may just take it. So I'm going to throw that out there to see if we get a quick dip, it might get hit. Don't back up now, damn it. Keep. It won't even let it get into the 20s. Come on, man. I know it's doing this just because of me. The market doesn't like me for some reason. I know there are other people that have taken a lot more money out of this market than me. So just leave me alone and let me be. Come on. Don't make me to be a punk and take it off. But man, come on down. The water's fine. Come on in the 20s. The water is fine. You'll find it very refreshing. Bingo! Keno. Now, what I like to, I can put my stop back at break even and chill out. And let it do whatever the hell it's going to do. Because I've already, once I lock in profit, I have no stress on a trade whatsoever. And I give it 5 cents. I'm going to give it 5 cents on the slippage. So my stop will be 52.65. So it would be 52.65. The average cost is 52.70. So I think that'll be a good thing here. So let's see if we can chew through some more. I don't want to take profit again unless we get 51.85. So now it's on what do you call it? Autopilot. So it's on autopilot now. Well, Dan, you saw it. I just saw your question. It's gonna be 51.85 is where I would want to put it. So this is how we manage a position. Now, if this was traditional trade at the open, we would be seeing more volatility. This would sell off harder. Our profit, obviously our profit would be a lot more significant. But this is a later trade. This is a trade after 10:30. The volatility is a little bit slower. And it's kind of, the moves are going to be a little bit smaller. Now, one of the things we're running into, the deviation band, the VWAP deviation band. And I don't have it on this SureTrader Pro platform. I'd ran an update, but I don't see it. Somebody told me that they had deviation bands on there now. But the deviation band on CCL is at 5204. I want to see it, kind of open up a little bit. My final target on the CCL is 51.27. So let me bring up a Thinkorswim chart here so you can see what I'm yapping about. You guys can see what I'm yapping about here. I don't know what the hell's going on with, every now and then Thinkorswim decides it wants to take forever. To load up. Alright, so here is the lower deviation band. These two yellow lines, these are the deviation bands from the VWAP. I use this to help give me an idea of the volatility in the stock and which direction the volatility is flowing. Because when the volatility dries up, these two lines come together. They start closing in on each other. That means the volatility is going out. See how this one is slightly dipping lower? See, the last time I looked, it was, still at 5204. It was at 5209 about 5 minutes ago. 6 minutes ago. So this is actually opening up. It's dipping, and when a stock has really good volatility, it would just be running this down. You know, you would get a big, you see how these candles right here in pre-market kind of took off. That's the kind of volatility that we would see. And the deviation bands open up. Now see, we trade outside of them, but it's still pushing down. See where we're at now. We're at 5203 now. So I like that. I like the fact that the deviation band is going down ever so slightly, but it is going down. And it tells me we have significant pressure, selling pressure. It may not stand up. You may have a big buyer come in at 52 and eat this up, but right now it's showing that there's a lot of selling pressure, or we have more selling pressure. So that's what we're looking at, and this is what I'm looking at on my Thinkorswim. Now, oftentimes I will put my next order down here on the lower deviation band, but it's a little bit too tight as to where I took profit before. So I want to get it. The next logical place for me to take profit is around 51.85. And that's why I put the target there versus, you know, leaving it on the deviation band. Now, this is the final target that I'm looking for right here. It's 51.27. I know that's really optimistic based on the way we're trading now, you know, but that's a goal. So that's where the last 75 shares would go off, you know, if it gets down there. But that's how I'm planning out my trades, you know, what I'm using to plan them out and how I pick my profit targets. But I tell you, this really it really tests your patience. You know, when the volatility is really low, and I don't like trading in these conditions unless I'm significantly engaged in the trade, meaning I've taken profit once or twice. Then all I do is just put it on autopilot and go about my business. I don't even have to sit here and watch it. You know, so especially if we get 51.85, I mean, I'll set the stop, the final profit target, and I won't watch it. You know, so I'm kind of holding off going to lunch. You know, until I see what's going to happen here. Are we going to be able to fade this, or are we going to claim, and you see this is a significant level here. Are we going to claim this in the 9? You know, that's my sign to take it off. I won't let it stop me out at break even. If it closes above all of this, I'll take it off, whether I'm at my break-even stop or not, and just move on, because this tells me that technically this trade doesn't work. All right, so you know, those of you guys on live stream, we're in our final minutes. So if you got any questions for me, you know, feel free to send them out. Because I'm going to give this thing another 10, 15 minutes to see if it's going to dip and take out my second target. But Then I'll go grab some lunch. Scaling does not work for small accounts unless you're using unless you're using big share size, meaning you're trading penny stocks with thousands of shares, and then you could scalp and then you can make some money. But if you're trading the listed stocks, it's a little bit higher priced, you can't take enough shares to scalp in it to make sense. You got to look for significant moves. For me, 50 cents is ideal for my first profit take. In these market conditions, 40 is the minimum. I would not want to take profit unless I've gotten at least 40 cents on a trade. The purpose of each moving average is to let me know where there could be possible support or resistance. So I use them for, areas I could base a trade off of, or profit targets. So each one has the same function, is to let me know where support and resistance may be. No, it would have to take out the EMA. It would have to take out the 9. Yeah, just as I thought. There's somebody down here at 50 that I figured there'd be some people here at 50 buying up on this. 51. 52. I'm sorry, 52. Looking to buy up on this. I figured you would see that. And I wish I could run and strangle that fool too. In my small account, the one that I'm trading here, the most shares you'll see me take is 500, because I don't trade stocks cheap enough for me to take too many shares. Now, yeah, the $20, $30 stocks I could take 1,000 shares on easy, but 500 is usually where I'm comfortable. And when I'm really, really wanting to push my boundaries, I'll go up to 1,000 shares. But 1 to 500 based on stock price is my comfort zone. No, my stop is going to be based on how much room I have to give a trade to work. 50 cents is just an arbitrary number I used for the exercise, so that it would make it easy for you to know 50 cents is my stop every time. So I don't have to calculate anything or anything like that. I can just go to work. No, there's no separate meaning for each of the moving averages. They all mean the same. They're just based on different time periods or time frames. And I use all of them the same. So it's not a class. It doesn't take a class or video to really explain how I use them. Now in the day trading class, in the technicals, I do cover them. And tomorrow in the Roadmap to Success series, we're starting on technical analysis. So, we'll be talking about it then. But all the moving averages tell me the same information. It's just over a different time period. Yeah, Ben, I trade in 100 share lots. So it's either 100, 200, 300, 400. On rare occasions, I'll do 150. But like I said, I'm a simple guy. And the less calculation I have to do, the less time I have to spend worrying about calculating this and calculating that, the more I can focus on trading. So 100 share lots, I can quickly figure my stop and not even have to calculate anything. Or I can figure how much I know I'm going to enter, either 100 shares or 200 shares or 300 shares. Based on the price, the share of the price. Come on down, hit me. Hit me. Don't you dare run back up until you get down into the 80s. Oh, come on, man. Don't tell me that's all you got. I know you got more than that. I know it. Yeah, if I'm in 300 shares, I'm risking 50 cents. But the stock is going to have to, not have $1 candles. The average true range cannot be $1 over the last 5-minute candles. Because if that's the case, then I'll only go in 100 shares. But my share size is going to be based on how much room I got to give it. And I round everything so I don't have to calculate stuff. Things don't need to be to the penny. Calculations don't have to be to the penny. All right, we're getting close, but no cigar. They're holding it here at 52. I hate to move my price. I hate to move it. The lower deviation band is at 51.89 right now. And it's still trending down. But we have got to work our way through 52. If we can't work our way through 52, then it's a done deal. All right, 5 more minutes and I got to go. I'm getting hungry. If I get hungry, then I'll start trading crazy, thinking that I got to make money to eat. Well, I give myself to 11:30 to take profit on it. To take some profit on it. I'm going to have to go rogue on this. I'm going to have to manually take some off here. See if we get another good move through 52. Yep, Leo, the day trading cat. That's my man. Yeah, that's kind of hard. I find it hard to stay away from all these MSGs. I know not to eat Chinese food in the middle of the day anymore. I don't like the fact that we're not getting through 53 with any significant depth. I think 52.95 was probably the lowest it got. But I want to see it with some depth. I want it into low 90s, high 80s. Oh, come on. I saw that sea of red come through. I thought we had it lit. Damn, they're not letting this thing go. Alright, if it dips down there again, I'll just take some. And I can go to lunch. No, I am not going to glorify him by doing that. Besides, I never did take a picture of it. I never did take a screenshot of it or anything. He made me some spending money for New York, though, that's for sure. Maybe I count to 3. Everybody start jumping up and down. Maybe this thing will... Maybe we can send it low. All right, let's go. 1, 2, 3. Something's got to work. We can't crack 52. We can't crack 52. We need to close 10 cents out of 52 in order for it to work. Come on, man. Let this thing go. Stop playing games. Yeah, somebody was asking me about my son's BPTH trade. No, I don't look at my P&L. No P&L here. All right, so I'm gonna have to take some off here, and then I'm gonna take 100 shares off, and then just leave 50 on. This thing is just not going. Somebody's defending it well here. And I'm going to go to lunch. And I'll just leave 50 shares on to see if it's going to go anywhere. Look, if these guys get ate up, come on, give me another quick dip. No, it's not going to happen. All right. I'm just going to leave this on through lunch. And let's say if it's looking good after lunch, I'll add to it. So my stop's going to be 52.40. That should give it enough room to test VWAP and all that other good stuff. Alright, so we're done on that. Just got 50 shares just to see if it comes back and it does make that big move. If not a bad not a bad recovery. Put us back square on the day so we can start the afternoon, fresh. So thank you guys for hanging out with me here on YouTube. We'll be doing another one sometime in the near future. So you can catch a glimpse. Maybe when the market picks up, and the days are going, a little bit stronger. But I think these are the days where you learn the most. These are the days where you really learn the most about the market, and more importantly, learning more about yourself. Because we need to get to know ourselves and what we need in order from ourselves to be successful. And days like today teach us that. Do we have the right patience? You know, do we have the discipline we need to sit on our hands and wait and not chase stocks other people are posting? You know, it's just one of those deals. So, hope you got something out of this, and I will catch you guys later. Any other trades, you know, the conclusion of this, and then any other trades, you know, we'll be sharing on our recap video. So you can look forward to that. So I catch you guys on the other side.